Thanks to Tesla, the cost of electric cars is decreasing. Buyers will benefit, but automakers' bottom lines won't, at least temporarily. Market share must be guarded by the auto industry. And now, it looks like Ford has just declared war against Elon Musk's company. Well, it's not some exciting factor now, as each company is planning to be the best in the EV industry and trying their best. Quality is job one for Ford. What it has to offer. You're watching Tech Addicts, your only spot with the latest updates and news, so let's get started. It is quite unusual for a car manufacturer to reduce the MSRP of a vehicle after it has been introduced to the market. But this is exactly what has occurred to the 4 electric vehicles that are selling the best in the United States now that Tesla and Ford have both announced significant price cuts for their products. The beginning of a full-blown price war for electric cars. Is that even possible? According to Alan Nanasinkham, Senior Vice President of Business Development at the automobile pricing company TrueCar, the measures made by the 2 manufacturers surely put pressure on other companies in the electric vehicle sector to make cars more inexpensive. Ford Motor Company is cutting the price of its electric Mustang Mach-E by an average of $4,500 in reaction to previous price reductions made by Tesla Inc. This move will ratchet up the price battles in an electric vehicle market that is showing signs of slowing down. The reduction is being offered on a model that Ford has already identified as being unprofitable. Nonetheless, the company has stated that it aims to offset the further loss of margin by increasing production by 67% this year. This action, together with discounted financing rates on the Mach-E that can go as low as 5.3%, is intended to compete with Tesla's decision to cut pricing across its whole lineup by as much as 20%. In addition to this, it brings the Mach-E into compliance with newly imposed limits on the cost of electric vehicles, allowing it to become eligible for federal tax credits of up to $7,500 under the Inflation Reduction Act. The battle to win over purchasers is taking place at a time when industry analysts forecast that the rate of growth for electric vehicles will stall this year. Maureen Gaja, the chief consumer officer for Ford Model E, told reporters that the company's competitors are also altering their rates. Model E is Ford's electric vehicle unit. Because we are looking to maintain our position in the market and remain competitive, we are required to respond. As of 11:19 a.m. in New York, trading was down 1.4% to $13.08 for Ford shares, which had previously dropped as low as 2.4%. Investors are bracing themselves for a price war because it is expected that other electric vehicle manufacturers will follow suit in order to keep their vehicles competitive. In a letter to investors that was distributed on Monday, Tom Narayan, the analyst working at RBC Capital Markets, stated, "We expect more price reduction to come. According to our analysis, the Tesla cuts are already causing a domino effect and will continue to do so in the near future." The Mach-E model with the lowest starting price is now available for $45,995, a decrease of $900, while the GT Extended Range model with the highest starting price is now available for $63,995, a decrease of $5,900. In the meantime, the price of the California Route 1 Extended Range variant has been reduced by almost 9%, and it now begins at $57,995. In June, Chief Financial Officer John Lawler stated that the increase in the prices of commodities had wiped out any profits that had been made on the Mach-E. According to Lawler, the automaker's response at that time was to respond by increasing pricing on the Mach-E in order to reduce losses. At the Deutsche Bank Automotive Conference, Lawler stated that when the company launches its EVs, you're going to see pressure on the bottom line and they're not going to be favorable. Yaja stated that Ford is actively working to increase the Mach-E's margins, but he would not comment on whether or not the model has become profitable. Yaja confirmed, "We obviously want to generate money," when asked about their goals. In an ongoing effort to reduce production costs, we are re-engineering the car. We are seeing genuine gains in our cost position as a result of scaling up our production, and we're getting some relief on some commodities, Yaja added. Ford wants to produce 2 million electric vehicles annually by the end of the year 2026, and the company has committed $50 billion to the research, development, and manufacturing of electric vehicles. The automobile manufacturer, with headquarters in Dearborn, Michigan, was the second largest seller of electric vehicles in the United States in 2018, trailing far behind Tesla, which currently holds approximately 2/3 of the market share. Tesla has the ability to lower prices while still maintaining excellent profit margins because of a gross automotive margin of 25.9% in the fourth quarter. And according to analysts, Ford does not have enough room to maneuver. An analyst from the Bank of America named John Murphy stated earlier that Tesla had larger margins than other original equipment manufacturers, including GM and Ford, as well as the cushion to drop costs even further. Most OEMs are now losing money on electric vehicles, and these price cuts are expected to make business much more difficult at a time when they are striving to ramp up production of electric vehicle products. Tesla is ideally positioned around scale, brand, battery technology, and the Musk DNA, a Wedbush analyst said, while others are aggressively going after market share in this all-out Game of Thrones struggle. In a report released following Ford's reductions, both Ford and ourselves feel that GM will have to reduce their profit margins in order to raise their sales volume during this critical period. To summarize, they are not going to lose EV clients due to pricing, particularly at this time when EV tax credits are being considered and the 313 area code is banking its future on EV growth. That area code 313 is for Detroit. Both General Motors and Ford have ambitious plans for electric vehicles. Both companies have set a goal to reach annual sales of around 2 million electric vehicles by the middle of this decade. While maintaining their existing gasoline-powered automobile business, both companies intend to increase their overall market share and grab market share away from other automakers. To this day, GM has not reduced its prices. The business stated on Tuesday that the prices of its electric vehicles are reasonable and that demand is still high. In addition, GM already offers some of the most reasonably priced EVs. Comparatively, the starting price of a rival electric vehicle like the Model Y is approximately $53,000, while the starting price of the Mach-E is approximately $46,000. Because it generates more money from the sale of electric vehicles, Elon Musk's company can afford to exert pressure on its competitors. In 2022, Tesla had an operating profit margin of greater than 16 percentage points. In 2022, GM achieved an operating profit margin of 9.3%. It's anticipated that Ford's margin will be around 7% for 2022. Ford will release its financial results for the fourth quarter very soon. Investors are pleased with Tesla's decision to lower its prices. Since its low point on January 5th, the stock has gained around 51%, whereas the Nasdaq Composite has seen an increase of almost 11%. Investors in Ford have not reacted positively to this news. The announcement of the price cuts resulted in a drop of 2.8% in the stock price for the company's shares on Monday, but the overall market was down 1.3% on the day. In trading, the Ford stock increased by 3.3%, which may have been encouraged by GM's solid earnings for the fourth quarter, while GM stock increased by 6.8%. The most important question at this point is whether or not other manufacturers of electric vehicles would lower their suggested retail prices. Although some businesses have already stated that they do not intend to take such action, the situation is still in the process of developing. General Motors CEO Mary Barra stated the following: "Right now, we believe that our prices are competitive with the market. Naturally, we're going to keep an eye on it, and we'll work hard to ensure that we don't fall behind the pack." Oliver Blume, the CEO of Volkswagen Group, made comments along the same lines to a German newspaper. He explained that the firm is confident in its current EV pricing and is primarily focusing on reliability. The electric vehicle industry was taken aback by Tesla's decision to lower its prices, and Ford's action may be the first major indication that prices for EVs as a whole may become more affordable this year. Go further, as they say. This is it for the video today. If you enjoyed watching the video, please give it a thumbs up and subscribe to our channel, and thanks for watching.